Here we are live, Google review time, 5:41 a.m. Pacific Standard Time, 4/16/2012. What we are going to do is we're going to feature here in the pointer of what happened in one of the greatest, well, we feel Ponzi schemes. Look at here, the 625 call on a weekly level. 35.14 was the close. Look what happened. Last print, 5 pennies. Now, it was something that people are not used to, but we are in the discovery phases of this type of markdown levels, like the low was 410 here, and the high was 29, and the low was 410, and the close, though, was 38.15, and that was a 620 call, and that was on Google. And that's the kind of manipulation that you would not normally see, but it is the reality of what happened on the 413 620 call. So from 38, there's a markdown, so from 29 down to 410. Then once that little Ponzi scheme was out of the way, there was a small bounce. But look, it had bounced once, but then it came back and closes at 450. So this is what it looks like, and here's a 630 413 call right here I'm featuring as well. 17,000 people hooked here. Don't forget the 625 on that weekly level. There was 5,291 of them that went down to that nickel print. Now, and we had them out there at 10 cents to buy below the market on other strike prices and got hit, and they didn't give us our $30,000 bounce as they normally potentially, that's the, between 20 and 30. However, that wasn't there. What we are going to take a look at, though, is how they stripped all the premium out of these calls. And so they did the May ones. All right? Now that they have taken all the premium out in these negative mathematical ranges, is where would that high-frequency model with an invert process go up mathematically as it was slammed down? They took all the premium out of that bull right here on the call side. Look at the amount. Something we have not seen year to date before. And we do make markets in these things every day with our live videos, and we're going to want to help the public, and we're going to put programs together so that you don't become part of this. And the thing about it is, we are in our early phases of high beta overbought stocks in the cycle, where they're taking both the call side short and the put side short and taking the premiums out, both sides of the market. So even if you are right, let's say you did have a put option and it closed at like some of them did. We have charts and things like that. Here's what here's your 630 call. Look at what they did. They were right up here. Look at the bottom. Now we own some down here at $4. So we're going to probably drop to a lower bid, and we'll start our bids at $1.50. Why not? And that's for MMT there on that 630 call. So we would want, why wouldn't we want 30 of them there? That is a lower price level that's very attractive. I'm not saying that it's going to go there. I'm saying, though, that the premium that they have taken out on this calendar calls here, and we're going to be doing lots of them, okay? And we're going to be doing this monthly expiration on the Google calls in a deflated price zone that could hit a bottom, and then you would come right back up in price, and the equity would hit support and take back off the opposite direction within the bid and ask. And remember, once again, this is live at 5:45 a.m. Pacific Standard Time, 4/16/2012. And what ends up happening, that reversal would have to be proven with the $10 reversal to the upside from where that bottom is now, and that is where that money is made. Once that little Ponzi scheme happens and is out of the way, you can see what happened to the 630 call. And think of what happened to the public from here all the way down. And you can clearly see that the low was $6 right here. Yeah. And that's where this low was, $6. And that's on the 6:30 call. I'm going to show some other calls. I'm going to show a 6:40 call right here that closed down here at 3. And this was where I was talking about that $1.50, $20, $30, $50 bids. Why not? But what I'm going to do based on the manipulation, I'm going to keep some 15-cent bids out on my options intraday if I have the open buying power, just because I know at that point of level, if they were to do it, I will get my maybe $5 that time for $50,000 profit. Yeah. So I'm going to take all of my options and any kind of Ponzi scheme that I have showing, and I'm just going to show that this is a April now monthly 6:40 call right down here, and we own some of it at toward the bottom, and we have to probably buy more of it because once this stock hits support level and wants to drop down and hit that support level in our chart, and we already know what the chart looks like, and we don't have to be fearful of it. It's a daily. It's the MMT. It's not going to hurt anyone. So here, we already know what these delta lines are for today. Okay? And this is a daily chart. And each one of these lines are going to be $12.73. Okay? That's what each one of these lines are. And they're accurate. They don't lie. And past behavior is where this whole upside daily move was, and there it was at shakeout because it was overbought. We were getting short up there. Now look, and that was the bounce into the earnings. And what happened was way above the marketplace in pre-market, the stock was up here. Okay? And the options and the low of the stock, because we traded off the bottom, was something like 628 and some change. And we're below that level right now. That's going to be where the resistance levels are going to be. But a half delta up is going to land it right here at this lower diamond. That's going to be the resistance level across here. Okay, on our daily. That's going to be the key daily diamond. And you can see that big, huge down move on that daily bar right here. And we can see that clear area of support. So let's just take a look at this side of it, in this part of it. We already know that this is the daily bar, and we know that we're about right there. So what we're going to do, that 624, it's been coming back up here to the neckline, but we know that on a smaller macro scale, let's say that within this delta range, this is 12.73. And remember, this is done live right now, okay? And it's 5:49 a.m. Pacific Standard Time. Now, let's say that they take $5 at a negative print to support, or let's just say they want to drop it down here to that support level. We will have limit orders tracing this side of the market all the time. Yes, for any manipulation within the bid and ask, and we are experts. The public, we're putting together programs so that you can avoid the train wrecks on the manipulation that they did in calls to people based on computer generated programs, both in the equity side and the option market side as well. And what it was the prices were calculated at lower levels, and then that's where they opened it before the actual stock price reached those levels. And that's where the premium hijacking was in the bid and ask on both calls and puts getting marked down at the same time, and huge dollar movements both sides. So once again, I'm just going to say though that the support levels will hold. Look for that lower level and have those limit orders out there. And what is one that I always like to use? I'll be happy to show you on a 3-minute level. And then we're going to price out the options next. Here's a 3-minute level. And what we're looking at up here is this 632.50 area. So basically, if we were going to have a quick flash trade to the opposite side of what happened here with this trade, this is just late in the day. Here, I'll let you see the whole thing because this is what happened and this is what it looked like on a 3-minute level. Bam! Look, 648 to the high. When this was falling in price, the put side was going down in price to a bottom and stealing that premium there on the open, which is a shorting the premium on that side of the market. And then the calls, well, they went all the way down. So if you short that too, you're making a double left short in the call and put side of the market, which explains to me that once again, that if this type of Ponzi scheme is going to be in the option market, well, let them bring it on. We'll be out to buy the rest of them because they'll continue to do the same thing as we move through this calendar earnings season at 5:52 a.m. Pacific Standard Time, 4/16/2012. So this is what it looks like on that Google 3-minute. And this is what it looks like where that high was. And look at this computer-generated program all the way down here. But then look at the bounce, MMT. Look at that. So you bounce like 1, 2, 3, 5 teenies. 1, 2, 3, 4, 5 teenies to that diamond. Then 2 more teenies. But this was the whole teeny range. But off of the bottom, you were back up in here. So off of the bottom, the stock does like to bounce. So what we're going to be key Pacific is what that lower delta would be with limit orders in. And I will do in the next video. This is just a history of what happened. And then it's part of the history that you can clearly see in the SMF equity brain that that's exactly how it comes off that bottom in price. Bam! That's what you're looking for. And if they want to come down and hit those levels again, they already are going to come down here in that wick. Okay? And that's what it looks like right here. That was a 3-minute, 6-minute, and then within that 9-minute low, that's how they manipulated everything that's in this video as far as how they stole the premium out of the call side and the put side identically. Hits the bottom, and now we'll have another slight gap down, and I'm going to say, hey, listen, anything that I can start buying somewhere right around between a bid and ask of, let's say, $1.20 by $1.50 in these things, I'm going to line that bid. I'm also going to really pump it at 75 penny bid, and that's on this 640 call. So 75 pennies below the floor. But because of the amount of manipulation they've been doing, I'm going to move that bid down to 35 by 60 pennies. And I'm going to keep a damn market out there because if they ever did do that, let them do it again. It will bounce off of the bottom. So that's as far as option pricing goes. That's in the next video, though. And I will show you the full conclusion using the daily chart. And this daily chart, once again, I just showed that last 3-minute, but you can see what the full day looked like. Okay? And if we're going to, when we do bounce off of that support level, you're going to want to be in this thing because if they do bring it down to any levels like around 618.75 or something like that, we're going to want to be buying a 615 call, 620 call. We're going to want to own the equity when they do find that last bottom support on that reversal. And I'm going to conclude that our system clearly shows exactly what they did. And down here is where the base of the breakout happened to the tops. This area right in here is going to be the focus of support. And I'll show you the area. This area right here, the 621 handle, this is the low bid area. This is where a major half bar was, my MMT. On 313, you had a high. Now, here's where the high was. 617.85. That was a high. Now, and what do I mean by testing is you could test that area. That's the lower area of where the whole daily breakout base ascending. You see that? So now we're going to come down and we're going to be looking at the area right here. So we're going to be looking at how do we get from the bottom and $10 up within these two lines today. All right, here's the 624 line. That's this half bar area, and that's going to be 629.26. That's going to be what? If we gap below it, which we already are, we know what this daily movement in that bid and ask is going to be. You can see the bid and the ask. This is a daily chart. So we're looking at it down here at the close, 624.60. So I'm going to show this piece of it very quickly. Then I'm going to go into a pricing level, and I'm going to give MMTs a half delta up is 637.33 today, and a half delta down today is, let's say, 611.88, and that's on, that's a half a delta. Okay, and that's what these lines are. They're $12.73. Now, these daily diamonds here that I'm showing within the trend cycle, once we do bounce off the bottom, we're going to be looking at this as resistance area, okay, on a daily. So we're below those prices, but they're going to be the resistance level coming back up, and that's that bottom up trade to test this diamond right here. Okay, and that was on 3/21 of 2012. Exactly right there. So that's going to be the resistance level once we find the bottom end. Now, there are other areas that are going to be of key interest, such as we'll be looking for this 628 area to be a resistance area, okay, on the way up. So if we're hitting this bid and ask here, and we come up to this resistance area right here where my pointer is, that's going to be one area of resistance that we have to clear to hit 632. Now, when you look at it down here at the 616 level, that's another $10 markdown to a lower support. However, the 620 handle right here is really going to help you identify where you want to be at support. That's from that close to that 620 and above line. Within the middle of those ranges, you'll find them. But I'm just saying that we will have to be looking at the put side right away before the opening bell, and we'll have to see how these things adjust themselves and where these reversals will take key level of support and then an automatic ascending value that will validate the turn in price, and you will have to be in at those lower possible delta levels because that's where the bigger money is going to be made. And I'm going to conclude a special documentary on the whole system that each one of the lines are 12.73 right here. So it calculated it that way for us, and it doesn't lie to us. So let us not forget where these key bars are right here, right now, 629. I got a 622.98. So you can see down in here, you can see I've got a 619.17 in this half bar here. That's a price support level. So any drop down into this diamond bar on this daily level right here in the MMT platform, we're going to get busy and go fetch the 620 calls, the 615 calls for the monthly of April expiration at their very lowest deflated value, where that bid and ask turn will eventually happen, and we have to be in that trade. So, all aboard to that 619.17 cent handle. And that's right over in here. So here's that 620 mark right here. That's just base. That's the top of that damn diamond right there on 315 of 2012. Yes, it is. And at that time, we can see, yeah, I can see exactly what it was doing. And that's the diamond, the daily diamond right here. That's that price level. Okay, and that was on 315. And you can see the price levels there. So you want to know exactly what you're doing when you're getting hit in these diamonds at support level. And that's going to be right across here. Now look, that's going to run you right across that top. And that's where that support level from when it opens up on a daily, you'll see the bar. So, and right now, I'm just over in that part of the chart, but I'm going to recalculate this daily. But these are the lower support levels, MMTs. I'm going to conclude it. And it's going to be right across here at that 620 handle, or slightly below it. As it said in that thing, this half bar is 619.17 pennies. And I can tell you one thing right now. It was already, that would be minus what? It closed 3.01 below its others. So I'm going to take a careful look here at what this will look like in the scheme of these deltas that I'm going to recalculate and make sure they're done right. So I'm going to add new ones. There, we did that. Now we have all the lines right here. Let's make sure it's right. It's 12.73. Let's make sure those half bar readings were correct. There it is right there, 416. Half bar is 622 in that diamond. And that we would like to see where the 622 level would hold support, and then run straight up and test that 10-day simple moving average at about right here at this half bar. And this half bar right here on the way up is 636.27 pennies, which is minus $22.10 from here, from that level to that level. So, and it's right here, closing half bar. So it's minus 22.10 ratio MMT. And this is a daily chart. It appears at 12.73 if I can get it confirmed. And we're going to move on to the option side. I'm going to conclude, though, once again on record, how they stole the 625 call, 35.15 weekly expiration. You can see the prices. Last print 5 cents. On the 620 call, which people don't understand, but we do want to put a public program together that you can, learn about this in an educational part. Minus 33.65. Last print 450. These were all the weekly expirations. Let us not forget that. 413, 2012, minus 31.83. 17,000 contracts, 5,900 there. Okay. The call side, they stole all the premium here. So this is a 421, 540 call that I was looking at on ISRG, and how they're going to steal the premium like they did on Google with this one right here, be the same thing. So I want to focus that ISRG 540 call against how they would take the premium out of this during the earnings season. It's a monthly call. And ISRG reports earnings. And they're going to do the same thing here as they did here. And so the thing about it is, by understanding what a Ponzi scheme is, you can get out of the way of it and take advantage of it to its full ability. So once again, that ISRG, let's stay on top of it today, and let's stay on top of these support levels here. And I will do the call side